Right now, as of the market close on Friday, November 21st, 2025, Billion to One Inc., ticker symbol BLLN on the NASDAQ, is sitting at exactly $110 flat. That is a massive intraday move, closing up $14.32, which translates to a 14.97% gain on the day. If you are looking at your screen wondering if you missed the boat, or if this is just the beginning of a much larger repricing event, you are not alone, because this price action is screaming for attention in a way that very few recent listings have managed to do. Since the markets are currently closed for the weekend, these figures represent the final tape from the last trading session. But the momentum carrying into the after hours suggests that the story here is far from over. When a stock ripping nearly 15% in a single session happens, especially one that has only recently entered the public markets, it usually signals a collision between institutional accumulation and a retail realization that the underlying asset might be mispriced. Most investors looking at BLLN see a molecular diagnostics company and immediately bucket it with the rest of the sector, expecting it to be another cash-burning lab fighting for reimbursement scraps, similar to what we have seen with Invitae or the more volatile days of Natera. The expectation is a slow, grinding adoption curve where science dictates the pace and the stock price languishes until a major catalyst hits. That is the safe consensus view that keeps people on the sidelines. The reality, however, appears to be significantly sharper and more aggressive. What we are seeing with this move to $110 is not just a good day at the office. It looks like a fundamental repricing of the company's core technology, quantitative counting templates, or QCT. The market is waking up to the fact that Billion to One isn't just running tests. They have effectively digitized biology in a way that allows for an exponential increase in resolution without the exponential increase in cost that usually plagues this industry. While the expectation is linear growth, the reality of their platform suggests a scalability that looks a lot more like software than a traditional wet lab. And that discrepancy is exactly where this 15% surge is coming from. When we look at the broader market context, it is easy to get distracted by the noise. You have people constantly checking Tesla stock to see if the EV sector is leading or watching Nvidia stock to gauge the appetite for risk assets. But the real alpha often hides in these specialized pockets where a technological moat is being established in real time. If you are sitting there with your Schwab Intelligent portfolios or checking your balance on a standard individual brokerage account, you might not even see BLLN pop up on the top gainers list unless you are specifically screening for mid-cap biotechnology. But make no mistake, the volume we saw on Friday indicates that this is not just retail traders chasing a momentum candle. This has the fingerprints of institutional accumulation, the kind of buying that doesn't care about a few cents on the bid-ask spread, but cares about securing a position before the rest of the street realizes the total addressable market has arguably doubled. It is fascinating to watch because it challenges the narrative that the IPO market is dead, or that high-growth tech is the only place to find returns. Here we have a company that is technically healthcare, but trades with the velocity of a Silicon Valley darling. To understand why this stock is moving like this, we have to strip away the complex medical terminology and look at the business physics. Most genetic testing is like trying to find a needle in a haystack by pulling out handfuls of hay and hoping you get lucky. It is statistical guesswork that requires massive amounts of sequencing, which costs a lot of money to get a reliable result. Billion to One's QCT technology changes the physics of the problem. Instead of just sequencing more, they attach a molecular counter to every single molecule. Think of it like this: instead of guessing how many jelly beans are in a jar by looking at it, they're effectively tagging every single jelly bean with a unique barcode before they even put them in the jar. This means they can count them with absolute precision. This difference sounds subtle, but in the world of liquid biopsy and prenatal testing, it's the difference between a blurry photo and a 4K video. This precision allows them to run tests on standard equipment that other companies need million-dollar specialized machines to do. That margin profile is what the smart money is likely sniffing out right now. If you are using Robinhood app or perhaps managing your own funds through SoFi Invest, you've probably seen the chatter about precision medicine for years. It's a crowded space, but the reason BLLN is commanding a premium right now is that they've solved the signal-to-noise problem. In prenatal testing, for example, their Unity screen is the only test that can assess the fetal risk for recessive conditions like sickle cell disease or cystic fibrosis from the mother's blood alone, without needing a blood sample from the father. Anyone who has ever tried to drag a reluctant partner to a doctor's appointment knows that logistical friction is a business killer. By removing the need for the father's sample, Billion-to-One didn't just improve the test, they improved the entire logistic workflow of the clinic. That is not just science. That is excellent product-market fit. It brings to mind the way Apple stock became a staple, not just because the iPhone was better technology, but because the ecosystem removed friction for the user. BLLN is removing friction for the OBGYN, and that is a powerful driver for revenue growth. Let's talk about the price action we saw on Friday specifically. A move of $14.32 in a single session for a stock priced in the triple digits is substantial. It implies a rush to liquidity. Often when you see a move of this magnitude without a specific headline news drop, like an earnings report or a buyout rumor, it suggests that a large seller has finished selling or a large buyer has decided to stop waiting. If you track flows on Interactive Brokers trading platforms or watch the dark pool prints, you often see this kind of unclogging effect. It is possible that the post-IPO lockup fears are dissipating, or that a major fund has completed its due diligence and decided to allocate. For the individual investor using Fidelity Investments or perhaps utilizing investment help from a sophisticated advisor, the question is whether this is a buy high, sell higher situation or a trap. The RSI, Relative Strength Index, on the daily chart is likely heating up, but in a blue sky breakout scenario, which BLLN seems to be flirting with, traditional overbought indicators can stay pegged for weeks while the price continues to climb. It's worth noting the contrast between how this company is viewed by the legacy medical establishment versus the modern investor. The medical field sees a better test. The investor, using investing sites to research BLLN, sees a platform. The distinction is critical. If Billion-to-One was just a prenatal testing company, the valuation might look stretched. But because their QCT technology is platform agnostic, meaning they can apply it to oncology, autoimmune diseases, and infectious diseases, the market is assigning a platform premium. It's similar to how Amazon started just selling books. If you valued Amazon solely on book sales in 1998, you missed the point. If you value Billion-to-One solely on prenatal testing volumes today, you might be missing the oncology ramp-up, which is arguably a much larger and more lucrative market. Their Northstar Select and Northstar Response products are targeting the liquid biopsy market, which is the holy grail of cancer diagnostics, detecting cancer recurrence from a blood draw before it shows up on a CT scan. Comment below how many shares of Billion-to-One you currently hold, or if you are waiting for a pullback to double digits before starting a position. It is always interesting to see where the retail sentiment lies compared to the institutional price action we are witnessing. Transitioning to the broader landscape, we have to consider how BLLN fits into a modern portfolio. If you are engaged in self-investing or using a Fidelity mobile app to manage a basket of growth stocks, you know that biotechnology is usually a binary bet. It either works and goes to the moon, or it fails and goes to zero. BLLN is unique because it's already generating substantial revenue. They're not a pre-revenue science project. They're running at a revenue run rate that commands respect, which puts a floor under the stock that other speculative bioplays do not have. This reduces the downside risk slightly, although certainly not entirely. When you compare this to the excitement around Robinhood investments in crypto or the speculative frenzy in penny stocks, BLLN offers a strange hybrid, the volatility of a tech stock with the tangible revenue streams of a healthcare service provider. However, we must address the risks, because reality always has a counterpunch. The expectation is that their technology will seamlessly take over the oncology market. The reality is that the oncology market is a knife fight. You have massive incumbents with deep pockets and entrenched relationships